This is 95.3 Business Now.
Welcome back, everyone. Good morning to the show. The Central Bank of Nigeria took the country's headline interest rate to 24.75% by adding 200 basis points or 2% to the 400 points that was delivered last month at its first committee meeting of the year. The Central Bank on Tuesday adjusted lower the asymmetric corridor along the MPR to plus 100 minus 300 basis points, while retaining the existing CRR level for commercial banks at 45%, liquidity ratio at 30%. The central bank, however, raised the CRR for merchant banks from 10% to 14%. Walking me through those decisions and the expected impact on the economy and markets is Paul Alaje, a policy analyst and senior economist at SBN Professionals. Good morning. Morning to you. Thanks for connecting in, Paul.
Good morning, and thank you so very much for having me.
Thank you very much. It's been quite some time with touching base on radio. It's good to have you back on the show, and Mr. Bag. You've always been here. We thank you so much. Give me your thoughts on this latest decision. Any surprises for you?
Well, certainly, I wasn't expecting Central Bank or the NBC to increase rates further after the initial 400 basis point increase. It came as a shock. I would be very, very, very sincere with you, because in our organization, we're still trying to analyze the impact of the 400 basis points. You know that as monetary economy, we cannot permanently say we want to keep increasing rates, hoping that it will not have that adverse effect. The central bank governor properly captured it yesterday when he said that for practical economies, when you increase rates, certainly we have a trade-off effect. The trade-off effect is that it could crowd out investment, it could also crowd out employment, as well as crowd out growth. So bearing those three in mind, which are very, of course, very critical for fiscal authority, when central bank says that in an attempt to further combat this inflation as I speak to you, is over 31%, according to the National Bureau of Statistics. And the central bank feels that the money supply has significantly increased. So, as an organization that is really very interested in what is happening within our economy and what interest rates should be, I think it came to us as a surprise, because we are projected that the monetary authority will hold rates rather than increasing rates.
Great. Okay, so we've got additional 200 basis points. We've got 600 basis points on the table between February and March. Do you think the central bank is done raising rates for this year at this level?
Well, the current central bank is unpredictable anymore because in the history of Nigeria, I have not seen a 700 basis points. 600 basis points within 40 days. I have not seen that in all my economic research and economic history. I think what Mr. Cardoso seems to have decided on is going to personally, when I say personal, I mean the Apex Bank, we personally face the matter of inflation and ensure they adopt all monetary tools, no matter how tough, no matter how easy, they have decided to follow the way they wanted. So the current central bank is really going to be very difficult to predict them, because as Keynesian economists, we keep issuing warning that it's important for different economic components, namely fiscal authority, monetary authority, and trade authority, to converge. You see that with this decision, monetary authority seems to have left the fiscal and trade authority 200 miles behind. Because as of yesterday, in fact, when 400 basis point decision was made, I did not see, and I have not seen, and you are the reputable journalist, so you may know, I have not seen any matching policies coming from fiscal and trade authority. So, Mr. Cardoso, I've also made another 200 jump, saying inflation must come down. But food inflation is the real driver of inflation, because we of statistics has revealed that food inflation is all-time high. And even core inflation is not taking it easy with us. But we believe that apart from food inflation, what is happening to exchange? We have seen that it has significantly improved from 1,900 to 1,300 with the recent intervention by the central bank to 1,250 in the parallel market. We have also seen after adjustment at the immigration for importers, especially those bringing raw materials to Nigeria. That has also significantly reduced by, I think, about 10 or 12% in recent times. So all of this will mean that the cost of production or cost of sales in the coming period is expected to reduce. I think rather than using inflation, rather than using just NPR, increasing to 600 basis points, the other approach central bank has adopted would have been better, and we will start seeing the result. And I can tell you, two of the items we put yesterday at SPM show that there are marginal reduction, but it's still reduction, about 5% reduction. So we are monitoring the numbers, we are monitoring the figures, we are monitoring the action, and we believe that at the end of the day, we're going to have a better outcome.
So you've got retaining CRR for commercial banks at 45%, liquidity ratio at 30%, with the adjustment of the asymmetric corridor around the NPR from 100 plus 100 minus 300 to from 100 plus 100 minus 700 points. What do you think the central bank is? What's the playbook here in terms of how much liquidity is within the banking system? What do you think the central bank is trying to balance?
Central bank is doing everything possible to say, yes, we understand that this will crowd out investment. At the same time, we want a situation where the private sector is not completely stifled. But when you see that was for commercial bank, we need to see what happens to merchant bank. They also receive that 45%, saying of the money that is jabber from liquidity ratio, what you have to trade, you have to take part of those again to the central bank as your cash reserve requirement. So, as Michael Corridor has been adjusted to say, we are taking from one hand, but we are telling you we can be revamped on the other side. So all of these we translate to central bank saying we want to be involved with what is happening to money supply. Well, all of those decisions are good, but my only concern, my little concern, is that having studied the pattern of money supply in the last 8 months as SPM professionals, this is what we discovered. The money supply truly has increased, and central bank has stayed. So it's a valid point that money supply increased. But the question is, did the increase go to private sector or public sector? The research revealed that the increase in money supply was in fact into public sector, as what we share as fact has increased by 200 to 300% within the last 8 to 9 months. So how do we now what is shared in the public sector? I think this is where again we have to go to the fiscal authorities and say that they have to be more responsible with the funds that the people have entrusted with them.
I agree with you. But again, this is where I take it to the street for me. 24.75% is now the base rate if you are taking money from the banks, as it were, if you are SMEs, whoever. So where does this leave the man on the street looking to borrow from commercial banks? Take me to Market Street with us.
Well, going straight to the market, it's really going to mean that if you don't mean business, you cannot get money. And if you don't get any money, it means that the potential employment is gone. It means potential investment is gone. But I will quickly balance. Does not mean investment is gone totally or completely. I will tell you where investment will now come from. So it means that in the real sector, that's the proper language. If you're in the real sector and you want to borrow money to start business or to do business, it's going to be tougher. So if your thing is not picking up, it's going to be difficult for you to do the business. However, for those who are portfolio investment, which I think in any way, that between now and end of second quarter, which is June, very close, you are going to start seeing some kind of inflow of investment into Nigeria, provided that the Fed does not increase interest rates. And Nigerians have to be very hopeful that Fed does not increase interest, because if that happens, 1% or 2% increase in interest rate in America will certainly have implication on Nigeria investment. So T-bills, I expect it to go all-time high, and I also expect bonds to go all-time high. Unfortunately, the stock exchange may have its own fair share of losses in the coming period. That will not happen in the next 1 quarter. But in the next 2 quarters, what will happen to the stock exchange in Nigeria?
We've seen that already happening. You've seen investors crossing the street to the money market and fixed income right now. Of course, the stock market rallied towards the end of last year in January. So they've got their day in the sun. Let the fixed income and money market guys have their moment in the sun. Thank you so much. Paul Alaje. If you're buying freebies and all that right now, have a happy day, everyone. Thank you so much, Paul Alaje, policy analyst and senior economist at SPM Professionals. Have a great day.
Thank you so much.
Great, thank you so much. This is your Business Now for today, the 27th of March.
This is 95.3 Business Now.